Hello everyone and welcome to the Adviseable Advantage Property News Update. So generally speaking, consumer and investor confidence is returning to Australia as the COVID restrictions start to ease. The latest Consumer Sentiment Index shows a major improvement in confidence, and consumer expectations for house prices have also risen. Data from CoreLogic suggests that homeowners thinking of selling are becoming more bullish, and listings are set to rise in the next few weeks. At the same time, new data on house prices shows that property markets continue to show remarkable resilience across the suburbs of Australia with solid fundamentals. Some new research by the Property Investment Professionals of Australia has found that house prices increased up to 100% in the 5 years after the most recent recessions, from 1973 to the GFC in 2008. The research shows that looking back over the past 50 years, house prices were higher 5 years after each recession or downturn. So this research shows that talk of impending property doom has never actually happened in recent history. And those recessions or downturns lasted years rather than a few months. Now we're early in, of course, but 5 years after the recessions of 1973 to 75, the Sydney median house prices had increased by 101%, followed by Perth and then Brisbane. The results were similar in the 1982 to 83 recession and the recession that we had to have in the 1990s. So this research shows further that over the three most recent economic downturns, there were periods of annual house price falls in many capital cities, but the price reductions were never sustained or prolonged. In other news, a detailed analysis by CoreLogic suggests that listings of homes for sale are set to rise in the coming weeks after pre-listing activity rose 11% in the week ending May 10th. They say that with restrictions on open inspections and auctions having been lifted, agents will probably find that they have the capacity to take on many more listings. So even though consumer sentiment is still a little low, it has bounced back significantly over the past few weeks, with the May results of consumer sentiment regaining 80% of what was lost in the index over March. In the past week, the number of newly listed homes rose 12%, while mortgage activity rose 3% compared with the previous week, a further sign of improving sentiment. The research shows that confidence is returning to the market off the back of the eased social distancing restrictions and, of course, the government policies, which have helped to soften the blow of a negative shock to demand. So in finance news, we ask whether a loan pre-approval is worth it at the moment. So without wanting to sound too vague, everyone's circumstances are different. So when you are looking to buy property, it's worth discussing your options with a mortgage broker prior to doing anything, just to ensure that you are in a position to make a strong offer on the property that you are keen on. It's always going to depend on your buying conditions, of course. And in today's market, that is more important than ever. The banks have diverted many of their resources towards dealing with the impact of COVID, and their processing times have skyrocketed. Now, this isn't all banks, but it is some banks, and it depends on the bank, and it depends on what's going on at the time. So it's really, really important that you discuss your borrowing plans with your broker so that you know what you're dealing with and you can negotiate accordingly. So we do this as buyer's agents every day, of course. So if you need the recommendations and a good broker, then please give me a call, email us today so that we can put you in touch. And I'd encourage you to also watch our YouTube video about accessing finance during the pandemic, which I will link below. So just a short note really about the land tax reprieve. Commenting on the support measures launch, the New South Wales Minister for Finance and Small Business has said that eligible landlords will be able to apply for a land tax concession of up to 25% of their 2020 land tax liability on relevant properties, so long as they pass on the full savings in the form of a rent reduction to their tenants. So the concession was previously announced by the state government in response to the pandemic. Applications of the scheme can be lodged online, and once that is approved, then the concession will be applied to any unpaid 2020 land tax notices. Refunds will also be issued to those and for payments that have already been made. The Minister said that land tax concession is expected to be divided, let's say approximately 50-50 between commercial and residential investors. Landlords are encouraged to complete their applications before the 31st of October 2020. What they don't mention here in any of these statements is the impact that this could have on your landlord insurance cover. So, on that landlord insurance policy update, the property industry has been monitoring very closely the public statements from landlord insurance companies, and they've been interpreting those comments with respect to insurance claims in the current environment. So while it seems that so far most advisable clients certainly have remained largely unaffected by tenants requesting rent reductions, I think this is a lot to do with the fact that we advocate buying in good, solid and non-volatile areas. It does remain an important issue very close to our hearts because we want all of our landlords and property owners to be protected. The Real Estate Institute of New South Wales reports as follows. The landlord insurance company Terry Shear has advised that it will not be responding to claims for loss of rent as a consequence of a negotiated rent reduction. Terry Shear joins the ranks of other landlord insurance companies who have all taken a similar position. What this means for the landlord is that if the landlord agrees to a reduction in the rent for their tenant, then they may not be able to make an insurance claim for that loss of rent. But if a tribunal, for example, imposes a rent reduction on the landlord, then they should be able to make a successful claim. Your insurance will only cover what the tenant is legally responsible for. So if negotiations take place and the landlord agrees to a reduction, then the tenant is only responsible for the reduced rent, obviously. If the tenant then defaults, the insurance company would respond by paying the rent that the tenant is legally responsible for, and the insurer only has a right of recovery for that reduced rent as well. Each landlord policy is different, of course, so always check with your insurer first. Please check our website for more details on our services and how our advisors and buyers agents can help you. And I will see you soon. Bye.